Africa's biggest intervention to alleviate the economic impact of the coronavirus outbreak is being thwarted by an inability to get money to the people. The Labour Federation says it's concerned about the impact of a national lockdown to combat the spread of the virus that's brought most businesses to a halt. The 40 billion rand fund for laid-off workers has so far disbursed 356 million rand, and in the meantime, all is not well for media companies which will close down this month end, as well as Phumelela, which will delist from the JSE on the 20th of May after 70 years on the bourse. So let's get the latest from the market. We have Nadir Thokan, who is Chief Investment Officer at 27/4. Thank you very much for coming through, Nadir.
Yeah, thanks, Colin. Thanks for having me.
All right, so are things that very bad on the JSE today, more so that some companies are giving up?
Yeah, look, I mean, it's really tough going. You know, the economy is obviously going to come under severe pressure as a result of the lockdowns and the declining economic activity that we're going to witness because companies are not able to operate. So, you know, the environment is not conducive for new listings. And in fact, as we've seen a number of delistings pretty much over the course of the last 10 years as the economy has slowed down. I mean, if we look at the number of listings that we had on the JSE 10 years ago, we had 600 listings. Now we have just over 300 listings on the JSE. And, you know, every now and again we hear of a new company that's going to be delisted. You know, some of the more high-profile ones this year have been Clover, Pioneer Foods. You know, we've seen those delistings late last year. So, you know, the reality here, Colin, is that if this economic environment continues to persist, market participants are going to become more and more bearish about the prospects for these companies to be able to generate strong profitability, to be able to play a growing stream of dividends, and ultimately to yield good results to shareholders, which is why we're seeing the significant amount of volatility we are seeing in the market. After a very, very strong April, you know, the recovery did feel quite fragile because, you know, there was no new news flow which seemed to indicate that businesses would have an easier time of it. So, you know, the big recovery that we saw in April, we have seen May starting to see quite a bit of consolidation so far.
So how's stock picking going in as far as, you know, stocks that need a particular focus on? And you're looking at pharmaceuticals as well as tech stocks, which were on the upside when we had the lockdown, because there was this forecasting that when you look at, you know, people's interest out of desperation to use the internet as well as the prospects of getting a new vaccine, investors would focus much on those sectors rather than, you know, looking at investors or rather stocks that will not really flourish post the lockdown period.
Yeah, that's right. You know, so there has been some major sector rotation that's been happening. So obviously the tech theme domestically is quite hard to tap into because really the only companies that you can tap into from that perspective would be Naspers and Process. And even Naspers and Process are obviously highly correlated given that Naspers owns 73% of Process. So those are really the only two tech players on the JSE. But if we look at internationally, you know, the tech companies have really soared past or soared in April, kind of recovered all the losses that they sustained during the month of March on the back of exactly what you're saying. You know, if we look at Tencent in China, during the lockdown period, they had an additional 1 billion downloads of gaming on games on their platform just in China. You know, so as you mentioned, there have been people who have been, or investors that have been speculating on who the ultimate winners of this lockdown period are likely to be, which is why we've seen the likes of Microsoft continuing their very strong run because of their big cloud computing business. Amazon has continued to rally quite aggressively, despite the fact that they're a big retailer, and obviously those kind of services will be disrupted. They also have a big cloud computing business. We're seeing Tencent has been pretty strong and recovered most of their COVID losses. And with the pharma industry, we've seen Gilead Industries. That's been one that has been quite volatile, but has obviously gained quite a lot on the back of vaccine testing that they're doing and potential positive results from the vaccine testing. So there have been, and obviously on the losing side has been banks or financials. There's been energy stocks as a result of the capitulation in the oil price, although they've recovered some of their losses, not all of them, and particularly some of the smaller cap US oil stocks have been strong, but the big majors have continued to be weak. And that's really on the back of expectations for who the winners from this COVID lockdown are. So you're quite right. There has been some sectors that have been big beneficiaries, particularly tech and certain healthcare sectors. And there's been industries in the industrial space, in the transportation space. We look at airlines have come under severe pressure. We look at banks under severe pressure, and utilities and energy companies under severe pressure.
Right. So as the market slows, how are some indicators doing, looking at emerging market currencies as well as commodities?
Yeah, so emerging market currencies, we're off of our lows, but it continues to remain very volatile. If we look at the rand, we're kind of getting to a close of around about 18 Rand 60 to the dollar. That's off our lows, which we saw during the course of April, where we saw the rand breaching through 19 Rand to the dollar, but it's still quite a way off, where we saw it strengthening to earlier in the week. We in fact saw it getting to under 18.20 to the dollar. We're seeing Brent crude is starting to find a bit more of a firmer footing, trading at just under $30 a barrel. But industrial commodities in general, sentiment towards them remains very fragile because obviously they need the will to be growing for demand to come through for those industrial commodities and their prices to go higher. So, the gains we are seeing, the reality is that they still are very, very fragile. And we still are very sentiment driven, and emerging market currencies, commodities, all risk assets are still, remaining pretty volatile. And obviously the big beneficiary in the commodity space has been gold, as it's in safe haven inflows coming in. That we've seen those prices kind of firm by around about 30% year to date, and we're not seeing those gains letting up through the course of this week, certainly not.
All right, looking at social cohesion, Nadir, if you want to contain people, as long as they have something to eat and they can be able to stay home and not, be involved in a stampede, as we saw in Mahikeng, where there was a snaking queue, people wanting to purchase basic essentials. So what do we do when we can see that South Africa is going to be in the red for quite some time, given that it has disbursed money so that it can alleviate poverty and hunger during the lockdown? But the problem is the money is not getting to people, as we heard in an earlier report from Hasina Gori, that, for example, UIF is making payments, but people are getting paid 70 cents. And on the other hand, when you hear that some mine workers, bus drivers are not getting their salaries at the end of the month because they had not worked, there's a push and pull in what's supposed to be a give and take during the lockdown. How do you think things are going to turn out when you're looking at the very same money that the government is paying out is intended to keep the economy going and the money circulating during this distressed time?
Yeah, these are certainly very valid points that you're raising. And the biggest issue now, and kind of why we're starting to see, government losing a little bit of their credibility with regards to this fight against the virus, is that at some point the economy has to reopen. The economic damage that has been done, we need to reopen before it gets to a point where it's irreversible. We've seen ComAir basically filing for voluntary business rescue. We've seen EdCon filing for voluntary business rescue. We're seeing National Treasury saying that in a worst case scenario, granted it is a worst case scenario and probably not going to play out, but still something that needs to be discussed. And those forecasts are dire. We're talking about 50% unemployment, 7 million jobs lost. We're talking about, business unity business grouping saying that, the economy could contract as much as 16%, this year. And so the reality here, Colin, is that at some point we're going to have to get back to work, and at some point the economy is going to have to get restarted. or we're going to literally start to see people starving to death. And some of the stories you hear are horrifying about people collapsing in queues waiting for food. We know that government has set aside 50 billion rand in terms of the 500 billion rand fiscal package that was announced for direct poverty relief. But as you mentioned, a lot of that is not trickling down. So literally the only way we prevent this damage from being permanent, and we start to see a rebound from this depressing state, is if we get the economy going again, and if we get economic activity and economic output going again. It's obviously there is a risk to doing that, because you've got to balance it against the potential spread of the virus and what impact that might have on our healthcare sector. But a lot of individuals and a lot of entities saying that the risk that we're going to see from the sky high unemployment and the drag on the economy is going to be worse than the impact of the virus. And this is certainly what some segments of the market are saying. So it's still very uncertain at the moment. The reality, Colin, the only way we sustainably deal with some of these, shocking stories of starvation and poverty is if the economy does get back to work and we reopen the South African economy.
All right, thank you very much for making time. Nadir Thokan is the Chief Investment Officer at 27/4, and we're going to have to leave it there. I'll be back in the next hour with more business news.